What if I told you that one number could determine whether you get the keys to your dream home or denied for a loan? Welcome back to March Money Moves, elevating your credit in 30 days. I'm Sabriyah Callis, your partner in finding and funding your new home. And on today, day two, we're going to be unlocking the mystery behind your FICO score. Now, your FICO score is a game changer when it comes to getting approved for a mortgage, credit cards, or even car loans and some other installment loans. But what exactly is it? How is it calculated? And what matters most when it comes to boosting your score? I want you to stick around because on today's video, I'm going to be breaking it all down for you. Let's begin with the basics. FICO stands for Fair Isaac Corporation, the company that developed the widely used credit scoring model that we see on today. Your FICO score is a three-digit number ranging from 300 to 850, and it's designed to predict how likely you are to repay borrowed money over time. The higher the score, the better the chances of you getting approved for loans with lower interest rates and better terms. Credit score models do fall in typical ranges. So with the common ones with the FICO score range, you'll see 300 to 579, which is in the poor category and it typically needs improvement. 580 to 669 is fair, but it is still below average. 670 to 739 is good, and this is where most borrowers do fall into range. Then we have 740 to 799, which is very good. It's a strong credit profile. And then there's the exceptional tier, 800 to 850. These are the top tier borrowers. Where does your credit score fall? I want you to drop it in the comments below if you do know your range. Most people really want to know what actually affects your FICO score. Now, your score is based on 5 key factors, each carrying a different level of importance. First one is the payment history. It makes up about 35% of your score. It's the biggest factor because lenders want to see if you pay your bills on time. Even one missed payment can hurt your score. Amounts owed, they actually make up about 30%, also known as your credit utilization. This measures how much of your available credit you're actually using. So keeping your utilization below 30% is ideal. Your length of credit history makes up about 15%. So the longer you've had credit accounts open, the better. Lenders really do like to see a solid credit history. Then you have your credit mix. It makes about 10%. Having different types of credit like credit cards, car loans, a mortgage, it shows that you can handle various types of debt. Then you have new credit. New credit makes up about 10%. So opening multiple new accounts in a short period of time can lower your score temporarily. So keep that in mind due to the hard inquiries. So in short, paying your bills on time, keeping your credit card and balances low are two of the biggest things that you can do to maintain or improve your FICO score. Now that we've covered what impacts your score, I want you to know what doesn't affect it. Some people think factors like their income, bank balances influence their score, but that's not the case. Your income doesn't impact your FICO score. Though the lenders are going to ask for it or they may consider it for loan approvals, it's not going to show up on your report. Then there's your employment history, where you work, for how long you've been employed isn't a factor either. Then you have bank balances. That's going to be the money that's in your checking or your savings account. It's not part of your credit report either. The soft inquiries, the times that you check your credit report, those don't affect your scores. If you want to check it weekly, check it weekly. Your utility payments and your rent, these typically don't show up on your credit report unless they go into collections. That's a big no-no. However, services like Experian Boost, Rental Karma, they can add utility payments, rent payments to your credit report for an additional line of credit. I hope this video was able to provide clarity and it helped you understand what a FICO score is, how it's calculated, and what doesn't impact it. And with this knowledge, you're already ahead of the game. So your challenge for today is to check where your FICO score stands. Now, many banks and credit card companies do provide free access to your score. So log in and take a look and see if your FICO score is listed there. In our next video, we'll be talking about Vantage scores, how they're different from FICO scores and when those scores actually matter. So make sure you're subscribed, turn on those notifications, and hit that like button if you found this video to be helpful. I look forward to seeing you in the next video of March Money Moves. So let's build a strong financial future together. Bye now.